Welcome back, traders. We are going to be getting into stock ticker GME today. GameStop's the name. The squeeze is the game, and you are coming into resistance within like the next 2 weeks here, week or so, and that's exciting. That's exciting for these reasons, right? You formed up this rising wedge. I wasn't sure if it was a wedge or if it was a rising wedge, but it was on the daily time frame, and you're just now breaking down from that. So theoretically, right? If this chart pattern plays out, that would bring you down to that double bottom at 2154. However, before you get to that range, you have 22 flat. Specifically at this range, 22.25 to 22.20 is going to be a clinical support range that you need to hold if you are a bull on GameStop. However, I could totally see something like this playing out, right? You dump, maybe you knife, something like that. Higher low, and then you're gone. And that, for me, would be almost the Ethereum-esque broken pattern that you saw on ETH. I'll show you that in 1 second. However, I wanted to specify, if you are not subscribed, we are an absolute roll right now. We're going crazy. We're at 150 subscribers, so I would beg that you do so if you love me. If you don't, that's okay. But Ethereum. Ooh, Ethereum's looking pretty nice in that bull flag there. But to give you guys some retrospect or some insight on what GME could do, right? This has been a triangle pattern for quite some time on Ethereum. I'll go to the weekly. It's easier to see, right? You have this triangle pattern. You break down. You come up to it, reject, and then you make the higher high and higher low within this trading range. So I could totally see GameStop doing something very, very similar because of that daily rising wedge here that you had formed and broken out of. The good sign is today's volume was so abysmal. I mean, 4 million flat. And I think you'd be hard-pressed to find anywhere within this trading range that was less than 4 million flat. I would challenge you to do so. And to be honest, guys, I don't think that it's ever happened within the June trading range. I could be wrong. That's 4.3. So it has happened, right? But typically, your lowest red volume days are followed up by bullish engulfing candles. The bulls ran out of steam pushing this thing down, and the bears ran out of steam pushing this thing down, and then the bulls stepped right in here to push it up into $35. And I think you're looking at something very similar here. I mean, this was 2.1 million. That is abysmal as a doji candle sitting on the 9-day EMA. But this is 3 million. So, I mean, that was a low chop. But to give you guys retrospect, that is the lowest within the last 2 months, probably, that you've just had. And typically, you've formed that as a reversal pattern. Typically, you've gone the other way. So maybe this rising wedge fakes out. You go to the top of it, and then you go higher. Very, very possible. But what I do know is that on GameStop, you are within until 9/11, never forget, would be the top side resistance for this bull flag here on GameStop. And fundamentally, I mean, you check out, right? 10 billion in cash in equity between your offerings and Bitcoin. You have earnings coming up around that same time. I think it's September 8th. I could be wrong. Let's see. Get out of there. When are GME earnings? September 9th. Very, very close. But September 9th. Whoops. September 9th would pretty much get you all the way to the pinnacle of that wedge. So if you were to do something that you've done every single time on earnings, which is pump preemptively, I would anticipate, if I was a betting man, that you would pump out of this bull flag before earnings sometime within the next week or so. That would be my bet if I was a betting man, right? If I was a betting man, I would bet that you would do the same thing that you did here and here and here and here, that you would pump going into earnings and then you would dump going out of earnings. So maybe the earnings thesis looks like this, right? Regardless, you pump, earnings happens, you dump, you retest the wedge, and then you go for the $73 gap fill that we've been targeting for so freaking long. It's insane how long we've been targeting that gap fill. All the way up here, which is your last daily gap fill on the chart. So fulfilling this move and this pennant would fill every single gap on this chart, which GameStop has historically done. And that's why I am so keen to keep my conviction on this, regardless if you intermediate break up or down. We've covered this before, but we'll cover it again. To the downside, if you're going to break down from here, you do have critical and extreme support on this golden GME trend. This trend you bounced not once, but twice during the original meme squeeze. It caught you back here in April of last year, which squoze you up to 64, and could catch you again if you fail out of this bull flag. Now, would that be the biggest bear trap of all time? In my opinion, probably, because I think that there's so much going for the stock and in macroeconomics, between rate cuts, between wars ending, and between the fundamentals of GameStop, that I don't think that this chart's going to be held back. Going into the Bollinger Bands, this is something that has been covered heavily on my channel, and I will continue to cover it because the Bollinger Bands, often termed as the squeeze bands, right? The squeeze bands created by John Bollinger specify and they highlight periods of long-term consolidation. When you see these periods of long-term consolidation, eventually all droughts come to an end, right? So you're now within this consolidation in the pillar, the absolute corner of this bull flag that you've been in for the last 2 months, right? So last time that the Bollinger Bands were this tight were probably back here, and you had a give or take a $2 to $3 difference within the bands, which squoze you up approximately like $10. That's no small task, right? If you're holding 1,000 shares, right, $10 is potentially life-changing money, depending on what your financial situation is. However, this is the tightest I've ever seen these freaking bands, while also making an all-time low on the ADX, which is average directional volume or index something. Typically picks up with a change in direction of the stock. So when this does begin to squeeze up or down, you will see the ADX get out of its all-time low. And typically when that's happened, it's happened with extreme volume. But let's delete some of these lines so you can better see the GameStop Bollinger Bands in the daily. So you're within a Bollinger Band of approximately $1.18. Really? I mean, that is the tightest Bollinger Bands on the daily I think I've ever seen on a stock, valued at $24. The top to bottom measurement is only 5%. So within 5%, within the pinnacle of this bull flag, something is going to break. And when it breaks, it's just going to be one of the stupidest, most nasty, stupid moves you could ever imagine. And so up or down, the Bollinger Bands do not predict direction, but they do predict volatility time and time again. I'll give you another example. Bollinger Bands were considered tight here with a $3 gap, and you rode that from $20 or from $19 up to $34. That is, what percentage of a move is that? 68 to 70% move. So no small task. The profit target from this bull flag, mind you, would take you up to that $73 gap that you have up here. So when you see a correlation or when you see confluence technically like that, it begs you to reason that this stock could do something stupid. Now, mind you, I am just aiming for this $73 gap. You could make all-time highs depending on the sequence of events that happens afterwards, right? But this is a logarithmic chart, so towards the top here, the price targets become scrunched and unrealistic. So I would aim anywhere between 73 and all-time high. It's not financial advice. That's my personal strategy. You guys do whatever works best for you and your family. But on GameStop, I mean, just a silly setup right now, and you couldn't ask for a better thing, especially having held through all of this to finally get your tendies, your bananas, whatever you want to call them, right? Your profits. That is a absolutely blessed thing. And I've personally been here since this. This is what got me into the stock market originally. Because there was nothing like that. This meme craze mania, there was literally nothing like this that I've ever seen. And there's been movies, there will be future movies and future studies that develop around this movement and making the markets a more free and fair place for retail investors. And that's what this whole thing's about, right? GameStop has the opportunity to absolutely make shorts choke on their short positions, because I don't know if there's a company right now out there that has a better P&L report year over year. I would challenge people to look at that, right? Because if you do look into the financials, right, you look at just, what was it? Balance sheet. Cash flow, no. Income statement, yeah. So the income statement alone, you're seeing insane year over year that are very unlike most regular companies, right? It's not every single company that you're going to see growth of 628% in quarter 2 of 2025 of your net income statement, right? Your net income. So GME needs to continue what it's doing right now, and we're going to be just fine, in my opinion. Not financial advice, but Ryan Cohen has us on an absolute tear of a trajectory that gets me excited. So if you guys enjoyed this update on GameStop, please slap the subscribe button, because I'm going to continue to cover meme stocks like GameStop, like AMC, like NEO, because these things are cyclical. Eventually, risk-on assets will become the meme craze that they once were again. And you're starting to see that with signs like NEO. I mean, just stupid price action on NEO recently. And most of it mirrors what happened back in 2021, right? I mean, go to the monthly. I got to get this thing out of here. There we go. Go to the monthly. You broke this channel for the first time. There's the train. You've broke this channel for the first time ever. And you're now going to test critical resistance. But back here, you made an inverse head and shoulders. Still not off the chart or the still not off the table here. But you could totally make an inverse head and shoulders here. If you top out right around $7, fill the gap, and then come back down to retest support, and then you go higher. Things like the monthly Bollinger Bands on AMC and GameStop, or AMC and Neo, excuse me, are the tightest they've ever been. And Neo just gained the mid band and is going into the top Bollinger Band, probably the most bullish chart that I've seen in quite some time, besides for GameStop. So it's very coincidental as IWM looks to gain more, as Neo and AMC and GameStop look to finally turn the tide. These macro indicators, such as the quarterly MACD, begin to curl up for the first time, and you're seeing boom boom candles. That's it for today, guys. God bless. And I'll see you in the next video. I'll do one more. I'll probably do one on Neo. So see you guys. God bless.